Hello, everyone, and welcome to our weekly live analysis webinar brought to you by Pure Prime. This is Mohammed Yaoud, and I'm the Chief Markets Analyst at Pure Prime. I know this might be the first time you see me here because basically it's the first time that we are doing this webinar on a weekly basis. Let me introduce myself real quick and introduce this webinar. What we will be doing during this webinar, it will be on a weekly basis. How would you basically benefit from attending this webinar? How we will go through with explaining everything today. So basically, I am the Chief Markets Analyst at PU Prime. I'm not the first, or it's not the first time for me basically to join PU Prime. I've been working at PU Prime before. We have helped launch the business in the MENA region, and today we are back basically to conduct our business again in the MENA region. So I'm a certified financial technician and a chartered market technician of level 2. I have been in the markets for around 7 to 8 years. I started basically as an amateur trader, and today as a certified analyst. My job is to help you navigate the markets with confidence and give you the best trading opportunities, let you understand and explain to you how markets will be going. What are the best scenarios? What are the trade opportunities that we have? And also what I do really like to focus on is the fundamental analysis, because basically fundamental analysis is really important. It helps shift the market trends, and it helps you increase your accuracy in your predictions when it comes to the technical analysis. So yes, you can do technical analysis alone. However, when combined with the fundamental analysis, you have a great power in your hands. So today we'll be talking about both. Basically, how I like to start my webinars is by discussing first the most important economic events on the economic agenda. Of course, it's a really important week that we are looking for. And after this, we will be discussing some hot topics that we are expecting during this week. Of course, we have the FOMC meeting, or the Federal Open Market Committee. We are expecting interest rate decision on the US dollar. Let me tell you that this is the most important market event of all time. It definitely moves the markets, and it moves the markets a lot. So today we will be discussing the FOMC meeting. The next one will be on Wednesday of this week. What are the possible scenarios? What are the cases? Because, at the end of the day, we cannot expect markets when it comes to the fundamental events. We cannot expect what the Federal Reserve will do. However, the best course of action is basically to draw the possible scenarios. If this happened, we expect prices to move in this manner, so we are ready to take action. And if the other scenario happened, you are ready to take the opposite action. So today, this will be my job with you. And of course, by the end of this session, we will be having a full comprehensive technical analysis on the main or the major financial assets. I usually like to look on a bit of everything. So this includes the US dollar index. Of course, it includes the major currency pairs that are like the euro versus the dollar, the pound versus the dollar. We also like to sometimes look at the dollar versus the Japanese yen, and it has had some great movements today, especially in the morning. We also like to look at commodities. What are the most important commodities? How are they behaving, like gold, like silver? We also look at energies, especially the US crude oil. And we end the session with a look on the US markets, the equity markets. And by this, I mean the most important indices like the US Dow Jones and, of course, NASDAQ and S&P. It depends on what actually has the best trading opportunity that we see during the week. So having had this introduction, I won't be doing this every time. It's just that because this is our first time here in this weekly webinar, it will be a weekly thing that we will be doing continuously on Monday, 12 a.m. or 12 p.m. Dubai time, which is 4 p.m. I think in your time zone. It depends on where you are at the moment. So let's start quickly by having a look on the economic events. So today is basically Monday, the 29th of April. And before we start looking at the economic agenda, let me tell you, whether you look at the agenda on investing.com, forexfactory.com, or whatever the source, I don't want you at all to look at the importance of the events in terms of, like, here on investing.com, it shows stars, 1 star, 2 stars, or 3 stars. It's supposed to show you the importance of the events and how it will impact the markets and volatility. However, it's not always that markets will respect those importances because markets change, okay? During sometimes you will see that markets are more focused on specific events. During other times, it's not that important. So I want you to understand fundamental analysis. Don't just follow what the agenda says. So today, on Monday, April 29, as I can see, there is nothing pretty much of importance today. We have a lot of data from the German economy. We don't have anything of importance. We have also some Euro news. And then the thing that I want you to focus on is the consumer confidence. Consumer confidence basically is an important indicator, whether it comes from the Eurozone, whether it comes from the US, uh, United States economy, or whatever it is. Consumer confidence shows you how well people, investors, and traders have confidence in their economy, because this shows whether we might be having any recessions or not. So this is basically what I'm looking at the moment. That's the consumer confidence today on the euro. We might have some extra volatility during the London session for today, and that's it. We will also be having the German CPI, which is the consumer price index. This is basically the inflation. The main indicator for inflation in the Eurozone is basically the CPI. And Germany, it's basically one of the, if not the biggest industrial economy in the Eurozone. So it definitely affects the overall Euro economy. And that's for today. For tomorrow, Tuesday, April 30th, some markets will start to get a little bit interesting here. We will be having the industrial production month over month for March. What does it mean month over month? It means basically that this number will be announced for March. We will be comparing March with the previous month, which is February. So here, as per the expectation, it shows that we will be having an increase of 3.4% in the industrial production month over month, which means a 3.4% increase compared to the previous month, which is February. In other indicators, you might see QOQ, which is quarter over quarter. This means that we are having a quarterly number, and we are comparing it with the previous quarter. And sometimes it will be YOY, which is yearly basis or year over year. And this means that we are comparing today's numbers with exactly the same period of last year. So if we're talking about March, so we are comparing March of this year with March of the previous year. This is just a general idea of how those numbers are explained. So tomorrow we are having the industrial production month over month for March, and we are having expectations of an increased activity in the Japanese economy. Japanese economy is running so hot at the moment, especially with what's going on with the Bank of Japan. We will definitely explain this later today. We also have the manufacturing PMI, which is the Purchasing Managers Index, and that's from the Chinese economy. The Purchasing Managers Index basically is a survey of the purchasing managers in top industries and top companies in the economy. If they see that the activity of purchasing managers is going higher, this means that those people who are somehow aware of the economic situations, they have confidence in the economy, they are increasing their orders for their factories or their companies. So this overall is something positive for the economy. So tomorrow we are having the manufacturing PMI from the Chinese economy. It's likely expected to decline, and it's basically for April. So we are comparing April with the reading for March. We are expecting a slight decline from 50.8 to 50.3. Another thing I want you to focus on is those numbers, those forecasts. It's not 100% accurate. Sometimes you will see that the forecasts on, let's say, investing.com is different than the other agendas on any other website, because at the end of the day, those websites, they are trying their best to know some forecasts or expectations. They do some surveys, they ask analysts about it. Yeah, most of the time they are the same, but it's not, and it's not so 100% accurate. So I want you always to compare the numbers that we are having with the previous ones. So the previous one was 50.8. That's an actual number. It's a fact. It's not an expectation. It's not a prediction. So we can rely on the previous numbers and compare it with today's numbers. That's the best course of action when it comes to the fundamental and the economic events. Anything of importance tomorrow? We do have the German GDP, which is the gross domestic product. It definitely shows how the economy is performing at the moment, and that's for the German economy. And as we said earlier, the German economy is the biggest economy or the biggest industrial economy in the Eurozone. So definitely the GDP or the economic activity in the largest industrial economy in the Eurozone will definitely affect the GDP of the Euro overall. And this is something that we will definitely look at tomorrow. We also tomorrow have the CPI, which is the Consumer Price Index. This time it's from the Eurozone. It's very, very important to look at this. So it will be basically at 1 p.m. and I'm talking about GMT +4. It also depends on your time zone and where are you at the moment. But we have multiple CPIs. So we have the core CPI, which is the CPI, and we disregard some volatile items like food, like energy, and so on. And that's on month over month, which means we'll be comparing the data for March with the data for April. We have the core CPI, but year over year, and that's for April. So we'll be comparing April of this year, 2024, with April of the previous year, 2023. So we can have a look on the inflation over the course of the previous 12 months exactly. We also have the general CPI, again, month over month for April, and again, year over year for April. So tomorrow is a big day for the Eurozone. Very, very big day. We are having the CPI. And overall, yeah, if we're going to have a look on the forecasts, we are expecting a slight decline on the core CPI year over year, 2.6% from 2.9. Of course, any decline in inflation will support the current sentiment from the ECB or the European Central Bank, because they are more slightly tilted right now to cutting the interest rates. And we will discuss this in later webinars maybe, but at the moment, let's agree that ECB is more tilted to cutting the interest rates. So any decline in rates will definitely support this cutting of interest rates and will basically affect, let's say, the euro negatively because it's not giving you interest anymore. And that's for basically tomorrow. That's an example of data that I don't really find important, which is the employment cost index. Here, investing.com says it's a moderate volatility event. I don't really believe that we will be having volatility or high volatility during this because we have more important stuff with the dollar during the remainder of the week. We also have the GDP, which is the gross domestic product again, but this time from the Canadian economy. Now, this is something that I want you to focus on, which is the house price index. Again, here it says it has very low volatility expected. I completely disagree with this. Why is that? Because the housing sector, the real estate sector in any economy, specifically in the United States economy, is one of the biggest sectors in the economy itself. And let me tell you this information, it's one of the fastest sectors to feel if there is a depression coming. Because basically, if people are seeing that there is a depression and the economy is not overall doing good, people will not be buying homes and getting, long-term mortgage contracts as long as they are feeling that things are not so good. So the housing sector, the real estate sector in any economy, specifically in the United States economy, is one of the fastest and most sensitive sectors to feel that there is a depression coming. So by tracking this indicator or those indicators from the housing sector, we can really feel whether the US economy will be going into recession or not. It is basically in a recession right now, but how long this recession will be can basically be felt and seen in the housing indicators. I think there is an issue somehow with the economic agenda. I mean, I'm already sharing this with you. Let me double check again. Oh, guys, you're supposed to be seeing this economic agenda right now. I'm having it on my screen. Okay, on Wednesday, we are basically expecting a very, very important day when it comes to the FOMC meeting, which is the Federal Open Market Committee, the interest rate decision on the US dollar. What are the possible scenarios? Okay, basically, during the last week, let's say 2 weeks, there has been a huge U-turn in the sentiment from the Federal Reserve. In the previous meeting, they said, and the dot chart said, that they are expecting 3 rate cuts during this year. Rate cuts means that the dollar will be going weak, people will be going to other assets. However, after seeing the inflation reports, inflation numbers are not doing so good. The US economy already entered into recession. People are starting now to expect that the Federal Reserve will not be cutting interest rates during this week. And I personally believe that this might be the situation. Art, okay. Is it, I'm not sure why it's not showing with you, the Euro confidence parts. Okay, let me double check this real quick. 1 minute, guys, just to make sure that you are seeing and following up with me what I'm explaining right now. Okay, now you should be seeing this screen share with the details that I'm explaining here, right? Okay, so we are on Wednesday here and we're talking about the FOMC meeting. So basically the FOMC meeting, as we said, we are expecting that the Federal Reserve might start hinting to markets that we are not seeing a rate cut this year. If this happened, basically the dollar will have a great boost to the upside because interest rates will be kept higher for longer. This means that people will still keep the US dollar as an investment. That's great. Now it's working. Okay, that's great. So I really think that we will be seeing, you know, interest rates held on the US dollar for some time because, as I said, the main focus for the Federal Reserve at the moment is to combat inflation. They want to make sure that inflation are going back to levels below 2%. The last 2 reports for inflation from the United States show basically that it's not going so well. The inflation numbers are resilient, as we say, and they are sticky inflation. So we might see that the Federal Reserve will be changing its tone during the next meeting. This is something that I can read from the FOMC members' statements during the past, 2 weeks. Let's say someone like Bernanke, who was the Federal Reserve chairman during 2008, the Great Depression, and he said that basically the Federal Reserve needs to stop hinting to markets that we might be seeing any rate cuts soon. That's for basically Wednesday, and that's for the interest rate decision. It will basically be at 10 p.m. Dubai time. On Thursday, we will be having the initial jobless claims, a good indicator about the employment markets in the US. However, the most important thing to look at when it comes to the employment markets will be Friday's NFP, or the non-farm payroll, because it will be the first Friday during May. and we will be having the NFP. It's the most important event that moves the market, let's say, after the FOMC event. So having those two in 1 week will definitely something that will drive volatility a lot in the markets. We have the FOMC on Wednesday, and we have the NFP on Friday. This is basically an indicator, which is the NFP. It shows how well the employment sector is doing in the United States, because employment is the main driver for inflation. When people are finding jobs, when people are receiving high salaries or high wages, this is in simple plain English. What they do is they have jobs, they have good salaries and good wages. They definitely just go and spend this money. They have some confidence that they can spend money, and they are not afraid from tomorrow. So spending money in the economy raises the inflation. So the Federal Reserve would like or would want to see employment cooling down a little bit. So uh, to start, let's say, easing the monetary policy. And I don't really believe that this will happen. Non-farm payrolls are expected to slow down a little bit from 303,000 new jobs in March to 243,000 new jobs in April. Let's wait and see how this will happen. And when it comes to the unemployment rate, it's expected to remain the same at around 3.8%. That's basically the key things that we are looking at on the economic agenda for now. And yeah, it's time for the technical analysis. Just please, guys, confirm in the chat that you can see my trading view at the moment so we can start diving deep in the technical analysis part. And let me explain to you how I do my technical analysis. Basically, when I come to a webinar, a live session, or anything to talk about technical analysis, I never have my analysis pre-prepared for you. So I don't do my analysis and I just show up on the webinar and just tell you this is what I expect. However, my approach is to come to the webinar completely with clear charts. I have nothing, not a single support or resistance. It's clear as day. I only have my momentum indicator and it's clear. What I do during the live analysis is I analyze, live, because the main purpose of the live analysis or the webinar is just not to provide you with trade opportunities or trade signals or whatever. The main purpose is to educate you on how to do this analysis. So how do we perform this? How to achieve this in the best possible way is by analyzing this together and seeing how to basically clear your mind and start, going through the process of analyzing from the higher time frames to the lower ones. This is what we call at the top-down analysis, and that's what we're gonna do at the moment. So, guys, I believe that you can see my trading view at the moment. Just please confirm in the chat, and let's start with the dollar index. A top-down analysis means that you have a look on the bigger time frame. The bigger time frame, of course, is the weekly, and then you continue moving lower to the lower time frames. So on the weekly time frame, you can pretty much see that the dollar index almost reached resistance around 106.48 or 106.50. That's a clear, very clear resistance on the weekly time frame. We reached those levels back on October of the previous year. We reached those levels again, and on the weekly time frame, this is a clear rejection price action. So we went higher, candles and the body started to go lower or smaller. This was a clear indecision candle, and just by the start of this week's candle, we are seeing this pressure moving to the downside. That's pretty much what we need to do on the weekly analysis or the weekly time frame. So the weekly time frame, it's basically bearish. Let's see what we do have on the daily. The daily is pretty much the same. However, I can see here that we might have a price channel. What do you guys think? So that's a clear price channel to the upside. We went higher to the upper limit, lower again to the lower limit. We touched the higher or the upper limit which also was a touch to the resistance levels, and the expectation on the daily time frame is to move lower. That's pretty much simple and pretty much straightforward. That's on the daily time frame. So the weekly is bearish, the daily is again bearish. What do we have on the 4-hour time frame? So the 4-hour time frame is basically a slight move to the downside, not so powerful move. So we might continue moving in a sideways manner because, guys, as we said, on the economic side of things, we have very important data to be released during this week, whether from the economic agenda or from the FOMC meeting. So as per experience, people who have been in the market for so long know this, when it's the FOMC meeting week, on Monday and Tuesday, normally we don't have any action on the dollar index. We don't have much volatility because markets are waiting for the big day. Markets are waiting for the big announcement. So my personal expectation is that we might be trending in a sideways range during Mondays and Tuesday sessions. We don't have much information or data to be released on Monday and Tuesday. Markets are waiting for Wednesday for the FOMC meeting, so we might be moving in a sideways manner. However, let's plot our scenarios. Let's plot our expectations, how to trade if what happens. First of all, this level, which is the 105.50, is basically a support, right? And we are currently having a resistance here. 106.15. So that's our most recent support and resistance lines on the chart, right? Great. Basically, for me, a break to the downside would be more preferable and it would be more better in terms of trading. I'll tell you why. Because upside, if we break the resistance, it's not so clean price action here. We have a resistance, and as we said, we have the upper limit of the price channel, so we don't have much space to move higher. On the opposite side, if we break this support, look at these great clean candles that we say it's the path of least resistance. This is the nearest support of importance, let's say, that we will be having, which is around 104. So right now we are in an indecision state on the dollar index between a support and a resistance. If prices broke above resistance, okay, we are expecting to move a little bit higher, but this won't be a good opportunity to trade on the dollar index. Why? As we said, we have previous resistances, we have the upper limit, we have the upper limit of the price channel, and as we said, we have a major resistance on the weekly time frame. So it will be a very hard, mission for the dollar to move higher. But the better opportunity to trade will be a break below 105.50. It will give you a very clean move to the downside and to target the levels of 104.0. 104, basically. Would you set limits at resistance or wait more after it hits resistance points? Okay, this question just came to me. I'll be answering those questions, but guys, if you have any questions, leave it in the comments and I'll be answering all by the end of the session. Would you set limits at resistance? If you're talking about, pending orders, as soon as the support is broken, let's say you have a sell position or the other way around, I don't normally use pending orders. It's this, I don't really like it because sometimes prices have fake outs. What happens if the price, breaks below support? It's a fake out. You have your sell, position entered and prices starts moving higher. My preference is just set a reminder. Instead of doing or having, a pending order, you can simply either on MetaTrader 4, MetaTrader 5, or even on TradingView, you can set alerts. So here, let's say if prices, the support is 105.50, right? If prices reach to 105.27, let's say, or 30, we can set an alert. Okay, an alert will be coming on your mobile phone, it will be coming on your email, it will be popping up on your desktop or laptop or whatever. Then you can open your laptop and see, okay, now that this break below happened, is it a confirmed break? Should I wait for a retest? Do we have high volume? Because basically the break depends on what time it is. If the break happened in a time that there is no session or no open volume, basically it might be a false breakout. And we will be explaining this a lot in depth in future webinars. I can do educational webinars and so on. Time will not assist me currently to do everything right now. But yeah, how to differentiate between a false breakout and a confirmed breakout, everything will be explained later. But just to answer your question, no, I don't use pending orders. Answer that, okay? You are welcome. So that's for the dollar index. Let's go and have a look on the euro. You know, guys, that the dollar index measures the currency strength against the major currencies, other currencies. I mean, the dollar index strength against other currencies. The most of the weight of the dollar index is basically the euro. So that's why somehow you have typical charts on the opposite side. So right now what we are having is on the euro, on the weekly time frame. We haven't really reached a key support here other than this one. You see this old one? That's the support that we have reached on the euro versus the dollar on the weekly time frame, and prices are starting to move higher a little bit. So on the weekly time frame, we are basically bullish, although I don't really like the momentum of the upward move. However, it's moving higher, and I can see also as well roughly the same, almost the same price channel that we had on the price on the dollar index. You can definitely see here on the euro. I think the middle line here will be of great importance. Let me check here. Yeah, that's the middle line of the price channel. See how many times prices respected this. 1, 2, 3, maybe 4, 5, almost 6. Great. So the euro is respecting the price channel and respecting the middle line of the price channel. But currently, to be honest, it's not a buy and it's not a sell because we are just ranging inside the price channel. Maybe you can have a better view here on the euro. Where's the path of least resistance? Again, I'll tell you what. If euro broke lower, let's say if I'm expecting that euro will move lower, can you see how many supports we have? Can you see a lot of price action that happened previously? It's not a clean range for us to short the euro versus the US dollar. So the best scenario for me to trade the euro is to go long, is to buy. When prices, if and when prices move above this resistance, which is the 1.0740, okay, that's the resistance. It was also a previous resistance here. Okay, just imagine if prices went higher. Do you see this clean range? Not a single resistance here until we reach this level of around 1.0870. So how many pips is it? Let me check. We are talking about a range of around 120 pips to the upside. So I don't care. I'm not here to tell you that euro is going lower or it's going higher because it's the FOMC day or it's the FOMC week. Prices can do anything. However, the best scenario, if whatever happens in the FOMC meeting, just imagine what will happen if the euro broke higher. It's a definite move to the upside of around 120 pips, this is where you can trade. This is where you can go long and expect your targets to be hit more often than your stop losses. Of course, everything is possible. However, this is the best scenario because you don't have anything here to stop prices. Okay. Okay, I'm seeing some very good feedbacks here. Thank you very much, guys. Okay, and that's for the euro. The pound will pretty much be almost the same. I don't want to waste your time here. Another resistance around 1.2570. Just imagine what would happen if we broke higher. It's a clean range of 120 pips. What happens if price rejected this level of resistance, okay? Whether on the pound or on the euro. Yes, we will move lower, okay? It's a definite move lower because it's a resistance. So if you have a rejection from here, it's a move lower, and then you can target the levels of the previous low of 1.2310. It's also 250 pips, but it's not so clean. You have support here, you have support here, another slightly higher support, so it's not so clean range. Yes, the resistance is 1.2570, a break higher is a move of 120 pips expected. Rejection from here is a short lower, but again, what is the best scenario? What is the scenario that I would prefer technically to see so I can trade and enter a high probability trade? Because guys, never follow prices. You draw your scenarios, you wait for the price to reach the levels that you previously have on your chart, and you wait for prices to move as you expected, whether this way or this way. I'm prepared for this and I'm prepared for this. I'm prepared for a long and I'm prepared for a short with my own terms and my own conditions. But right now, if you tell me, will prices move higher? Yeah, it can move higher because there is a resistance, but it can also move lower because we have a bearish divergence. Don't follow prices, be reactive to the markets. See what the markets do and then act accordingly. Don't be proactive. Don't try to take a couple steps ahead of the market because this is how you will end up losing a lot of money. Okay, dollar yen. We haven't done dollar yen yet. Let's talk about dollar yen. Dollar yen basically was very good till today because basically Bank of Japan during the last meeting during the last week, they clearly said we are not going to interfere in the markets. We are not here to support the Japanese yen prices. We are not going to do anything and we are not going to change our monetary policy. So the Japanese yen continued in declining, I mean the currency itself. And of course, this means that the dollar yen, the pound yen, and all of the Japanese yen pairs starting moving higher. However, during today's pre-London session, we had this great move lower. This is not yet justified. I'm telling you, 100% it's the Bank of Japan interfering in the markets because you don't normally have a move lower of 250 pips in one day or basically 4 hours or 6 hours. So it's definitely Bank of Japan, but they didn't announce this yet. So what I personally will be looking at on the Japanese yen, especially the dollar versus the Japanese yen, I want the daily candle to close bearish. Okay. Once the daily candle closes bearish, that's a clear resistance that we have here around 158.30 because what's a resistance? It's a bearish candle after going higher. So we had this upward move. We had this bearish candle here. So it will be a resistance in case the daily candle ended like this, ended bearish. So we are still waiting for the daily candle to close. Okay. On the 4-hour time frame, it's pretty hard here to look for support. I think it will be much easier on the 1-hour time frame. Why? Let me explain this concept to you. Can you see this? This level, which basically prices are currently trading at the moment, which is 155.50. What is the 155.50? This is what we call as the point of reversal. Why is it called point of reversal? Let me explain to you this. If you are having an uptrend, what is an uptrend? Basic market structure. It's a series of higher highs and higher lows. So you have a high, higher high, another higher high, and so on. You have a low, a higher low, another higher low. This is how an uptrend moves. What happens if markets do this? If markets suddenly move downwards, so now they are trading below the last low formed. This last low in an uptrend, it's called the point of reversal, because if I'm having an uptrend, I'm expecting only to see higher highs and higher lows. I'm not expecting to see a lower low. By seeing this lower low, this means that the point of reversal has been broken. And this is what you will see in some technical analysis methods they call as the BOS, or break of structure. It's the same because we were moving in an an upward trend, and the market structure changed from an upward trend to a downward trend. So this is a break of structure, and this last low is called the point of reversal, which is pretty much here on the dollar versus the Japanese yen. So we're having this point of reversal. It's a very strong support. Prices are standing here at the moment. In case the daily candle ended the day bearish, the next thing I would like to see is a break of the point of reversal. Do you know what this means? This definitely means that this huge uptrend that we are having here, let's say this last move on the dollar versus the Japanese yen, high, low, high, low. This is on the 4-hour time frame, but on the hourly time frame, there is a low here. This means that this upward trend, I'm not going to tell you that it's gonna reverse, but it's definitely time for a correction. So it will be a good opportunity to short the dollar versus the Japanese yen. Remember what we have said on the dollar index? We are also expecting a break of support. We will have a good selling opportunity on the dollar index. So this is how you do the intermarket analysis. You see the dollar index, a good opportunity for short. We are just waiting for a break of support. On the dollar versus the Japanese yen, another good opportunity to short. We are just also waiting for a break of support. This is how you prepare for your week. I'm waiting for some key levels to break, after which I will be executing my trades. And that's for the dollar Japanese yen. And it's time for gold. It's time for gold. And again, the top-down analysis means we will start with the weekly time frame. The previous week ended with a clear bearish candle. This is just a resistance here. Okay. I just want you to focus on the price action on the weekly time frame. Can you see this candle, which is the week that started on 8th of April? It's a bullish one, right? Do you see that we have had a high around 2,430, right? The following week, although it was another bullish one, we failed to register a new high. And that was when, if you're a price action trader or an analyst, you must have thought, yeah, there is something wrong here, because it's a bullish candle, but we failed to register a new higher high. Maybe the momentum to the upside is not so good at the moment. And what happened after that, which is the previous week? A definitely bearish candle. Not only we had this bearish candle with a lower high, we also registered a new low here. Do you see this low? It will not be showing here like this. Yeah, this low here of the previous week's candle, what did it do? It broke the low of the previous candle. This means on the smaller time frame, there is definitely a break of structure. Let's see it. Okay. So on the weekly time frame, what's our bias? Bearish, 100% bearish. On the daily time frame, what do we see? 100% bearish. It's an upward move. What a strong bearish candle here. Now, it's time for us to look slightly at the momentum indicator. What does it say here? Do you see this high? It's time for me to use some vertical lines. Do you see this high? This one, right? Do you see the previous high on price? This one. On price, we had a higher high, which is higher than the previous one, but on momentum, momentum failed to register a new high. This is what we call as the bearish divergence, and that was a clear indicator that gold prices, yeah, we are going higher, but we are not supposed to continue any higher because we don't have any momentum. Price action followed, and we started to see a downward move here. What does it say on the 4-hour time frame? Guys, we have just explained the point of reversal. Okay, so this is a high, low, higher high, higher low, higher high, again higher low, equal high, higher low, again equal high. What happened here? A break of structure. This is the point of reversal. This is when me, as someone who trades pure markets or price action, pure market structure, this is where I could have told you, okay, now we are heading bearish. Okay, so this is a clear move to the downside. What is this? This is a correction. So now that we are talking about corrections, it might be good to look at Fibonacci retracements. So the Fibonacci here says, let me get you the 50%. Yeah. Do you see what happened here? Prices breached the levels of 50% Fibonacci. It's an A, B, C. We might be heading lower on gold during the week. And yeah, I'm completely aware that my bias on the dollar is bearish and my bias on gold is bearish. It's not an inverse relationship, guys. Sometimes you can see the dollar moving lower and gold moving lower. Yeah, in the perfect market condition, it's supposed to be somehow in an inverse relationship. But what we are having at the moment in markets, geopolitical tensions, we are having fears of a third world war. We are having a lot of issues going on with the FOMC, with the interest rates. This market condition is far from perfect. So we might see this inverse relationship not playing out. So on the weekly, we are bearish. On the daily and the 4-hour time frame, we are bearish. Even on the 1 hour, I see we are bearish here. This is our latest support. And this is our latest resistance. Between those levels, let me just remove this. Between those levels, I'm not trading gold. However, what I'll be doing is once the support of $2,323 is broken, I'm definitely shorting gold back to the main support now, which is 2,290. Because after this, I'm expecting that this was a downward move, that was a correction, and then we are continuing lower. Of course, I'm not here to tell you or to give you long-term expectations because, as I told you, market conditions are far from perfect. We cannot expect what will even happen next week, but we are doing our best in trying to predict at least for this week. So my best scenario for gold will be basically shorting if we have a break below 2,320. Short term is good, definitely good. Yeah, I basically I used to be a swing trader for a long time. However, currently I do believe that swing trading is more hard than the intraday trading, because intraday, at least you got your few pips and you're out. Whatever happens in the markets, whatever the firm believes will happen, expectations change, and so on. So why would you be tied in a long term or even a medium term trade? Just, in and out, get your few pips, book your profits, and you're out. So that's for gold. And how about the US oil? I've not been liking US oil currently for so much, to be honest. On the weekly, we have had a recent resistance around 86.67, and the previous week was basically a support, right? Because we had a bullish candle after two bearish candles. So the weekly time frame, we are not bullish and we are not bearish. We are in a ranging market, right? This is the resistance that's on the daily, and this is the support. A move lower, move higher, ranging market. Again, it's a ranging market on the 4 hour. It's doing nothing basically. If I just, give you this chart on oil and tell you, yeah, is oil going higher or is it going lower? You'll just look at it and tell me, I don't know. It's moving in a sideways range. And whenever it's moving in a sideways range, this is when we call that prices have reached a short-term equilibrium, because you can see that there are sellers here and there are buyers here. This means that both parties are happy around this price, which is the middle range or the middle price of the sideways range. You can see that this is just around $84. Okay, how do we trade the sideways range? You just go down to the not even good on the 1 hour time frame. This is a level of interest here. 84.60, is it? Yep. See how much price action we have here. Support 1, 2, 3, 4, broken below, became resistance 1. Now I think that prices are edging higher. So yeah, during this week on the short-term time frame, we can see that on the 4 hour, is it a price channel here? Yeah, I can see a price channel. Let me check. Perfect. Perfect, perfect. So yes, move higher, lower, higher, lower, lower limits starting to go bullish. It's basically a good opportunity to the upside. We are targeting, let's say, levels of $84, which is the middle range of the price channel. And again, see how much this middle range stop prices once, resistance, second as resistance. And yeah, we are heading higher here. A break above 84 should push to 85. So although we are ranging in a sideways range or trading in a sideways range on the weekly, daily time frame, on the 4 hour, we are slightly heading higher. Currently, it's 83.50. I'm expecting personally a move to 84 and then $85 per barrel. Guys, let's conclude this session with the Dow Jones. And right now, if you have any questions, it's your time, because as soon as I finish this Dow Jones, I'll answer the questions, if any, and we'll be calling it a day. The Dow Jones on the weekly is definitely bearish. And I know I'm not expecting you guys to look at it quickly and notice what happened here, but prices were moving higher. We had a low, a higher high, a higher low, a higher high. What happened here? This was the point of reversal. A break below, we are heading higher, definitely a retest. I'm expecting it should go lower. This is just, a weekly time frame. We should go lower on lower time frames. Yeah. Point of reversal, we have already retested this, guys, here. So this is the point of reversal once broken. It used to be a support. Now It's a resistance, right? It's a resistance. So the levels of 38,000, and I really love to round numbers. So it's 38,500 is a very good resistance level on the Dow Jones as long as we are staying below. So it's a break lower, a retest. I think we are heading lower to test the previous low. Is it a good opportunity? Technically, yes. Fundamentally, I wouldn't trade Dow Jones this week because basically it's the FOMC week. And we are having some key announcements for the earnings session. We're having Apple and one of the other magnificent seven companies in the US. So yeah, it's a risky trade on the Dow Jones. Yeah, although I'm expecting it technically to move lower, I wouldn't personally uh, trade this. The best or the better scenario would be I'll be waiting this week to conclude. I'll be waiting for the support, which is around 37,700 to break, because only then it will be a clear downtrend and we'll be having lower and lower targets on the Dow Jones. So yeah, that was my technical analysis and fundamental analysis. This is what I'll be looking for during this week in the markets. Do we have any questions here? Any questions? It's your last chance. I think we are done here. No any questions. Everything has been answered. And yeah, guys, please use the chat. I can see people are trying to raise their hands. I'm not sure if the sound would be clear. So if you have any questions, please share it in the chat. And yeah, let's discuss it. What do you think about gold in the long run? I don't really think anything about gold in the long run because currently, if you ask me whether the US economy will face the soft landing or a long-term recession, I don't know. Not me, and not even Jerome Powell, which is the chairman of the Federal Reserve. Believe me when I say that currently, I believe that no one knows what's happening. They are just, following the markets bit by bit. And that's why in all of the FOMC meetings, I think for the last year, they always include in their statement that we will be monitoring the economic developments as necessary and as they evolve, and we will change the monetary policy if needed. This means that they don't know what's happened. Okay, they raised interest rates. Will inflation go down? It should. But how strongly will it go down? When? What will happen? Are there any, expectations or, let's say developments on the geopolitical side? Yeah, today maybe something will happen in the Middle East. Maybe some two countries will start, striking each other. This is very, very, variable time in the market. A lot of variables, a lot of, developments. So and that's why you're having, big, very big names and, investment banks like Goldman Sachs, JP Morgan's. What they do is they tell you, yeah, we expect gold to reach 3,000 during this year. And the next report, they say, okay, it's 2,500. They share expectations as of now, and now will not be the case tomorrow. It will not be the case after 1 week. Will not be the case after the FOMC meeting, which no one knows how it will play out. What do you think? Yeah. What strategies do you use on a day-to-day basis? I use pure price action, because if you cannot understand what candles are telling you, you should you should start investing time in understanding candles, because at the end of the day, it's buying versus selling. I don't like, people overcomplicating analysis. I used to trade Believe me when I say, with 21 indicators. It was a strategy that I used for a long time, 3 time frames. On each time frame, I had 3 indicators and 4 moving averages. So it was 7 indicators on each tab, on each time frame. And it was 3 time frames, so 21 indicators. And by time, it was a good strategy, to be honest. But by time, I thought, why am I overcomplicating things? You just need price, movements, and you need some momentum in case you need, to understand how fast prices move. And by time, I really don't use the momentum at the moment. Yeah, I sometimes look at it, but by experience, you will know how to read the momentum from the price channels. So this is my strategy. And of course, I'm just starting, my live sessions. I'll be having educational webinars and I'll explain everything about the strategies that I use. I'll be even explaining strategies that I used to have in my toolkit, and it no longer is something I look at. Really informative. Thanks a lot. Thank you very much, Mahmoud. How often does this Zoom meeting happen? It will be weekly. Today we are just, kickstarting this weekly analysis, but going forward, it will be every Monday at 12 p.m. And that's GMT +4. If it responded to rate cuts, it should go even higher, which is weird. Fears of recession, my friend. Really excellent insights, clearly explained. Thank you very, very much. What is your Bitcoin target end of this year? Yeah, we haven't discussed Bitcoin. Let me give you a brief, very brief explanation or technical analysis here. And yep, I don't really trade Bitcoin, to be honest. However, what you can see is you tell me what you should say it by now. High, low, high, low. Or it's a higher high and a higher low, higher high and higher low, lower high, break of structure, right? On the daily, it's sideways. I cannot tell you I'm bearish. It's the slowly or slightly tilted channel to the downside. So just read it. Just read what you see. Just read it as it is. But this is something notable because it failed to reach the upper limit and it's heading lower again. So currently, as we speak, I believe Bitcoin is going back to test the previous support, which is previous 3 supports. It's $61,000. Is it 60,000? No. Yeah, $60,000. A break below will definitely be a good short. Will it break below or not? Let's wait and see. That's for Bitcoin. If gold breaks the 2323 level moving to the downside, might that also be the direction of gold during NFP? Yes, it might. It might. It all depends on the FOMC meeting. It all depends on what will happen on Wednesday. Crypto is not good. I agree, my friend. Thank you guys so much for tuning in this weekly live analysis webinar. Once again, my name is Mohammed Yaoud, and I'm the Chief Markets Analyst. I was so happy to meet with you all. Thank you so much for your engagement and your questions. I'm looking forward for this daily or weekly analysis webinar. If you have any questions or any feedback, please make sure that you send it directly to our Facebook page, PU Prime. I'm here to support. My colleagues are here to support. We at PU Prime will always have your back and will always provide you with the best trading conditions and the best trading analysis to help you in your trading. Thank you so much. We'll meet again next week. You have a profitable week. Stay safe. Bye-bye.